Hi folks, this is Jeff from Distressed Loan Advisors, and in this video we'll be examining 20 of the most common mistakes that people make following an SBA default. If you do find yourself in the midst of SBA default and you can't afford to pay off your loan, you'll want to avoid these pitfalls. Stepping into one or more of them can make a difficult situation even worse. And of course, you'll find much more on the SBA default process and help navigating that process on our website, www.jasontees.com. The first mistake that people often make is avoiding their lenders. It's certainly stressful to watch your business crumble in front of your eyes, but when your banker's calling or emailing to see why you've missed payments, you need to be responsive. If you duck those calls long enough, you invite problems. Your banker will either refer your case to an attorney to start litigation or to close your file, or send your case to the SBA. If you also ignore the SBA, the file will end up at the U.S. Treasury, and that is where SBA loans go to die. The second mistake is taking on debt to save the sinking ship. Your business is running a cash flow deficit each and every month, not because the business is growing, but because it's simply not profitable. Rather than taking a good hard look at the viability of the business, many owners turn to credit cards, their 401ks, or their home equity loans. We're not saying your business isn't worth fighting for, but there needs to come a time when you look in the mirror and ask yourself, is this business viable? If you don't know the answer, you'd better find out, and quickly. It's only going to make matters worse if you max out your credit cards, only to close the business anyway. Often business owners will hold on for too long. You haven't taken a paycheck for yourself well, actually, you can't even remember the last time you took a paycheck. The business hasn't turned a profit since you opened, and yet you consider yourself a gritty business owner that's going to fight tooth and nail to make it work. But here's the thing about grit. It's not always a good thing. Not letting go of a failing business when you really should can backfire on you. If you accumulate debt and deplete your savings all in the name of saving the business, it could really hamper your chances of a successful SBA offer in compromise. A related issue is that folks will often put every last dollar they have into a business. We occasionally get phone calls from borrowers who tell us that their business is going to close and they need help settling. Great, we tell them. That's exactly what we do. So if the bank and the SBA were willing to settle, where would you get the funds to settle with? Their response? I have nothing left. I put it all into the business. I was hoping to claim financial hardship. Here's the thing about that. Neither your lender nor the SBA release personal guarantees in exchange for nothing. That's simply not how these negotiations work. If you expect to settle, you need to go in expecting to pony up some cash. So if you're thinking you may have to go down this road, be sure to make that decision before all the cash dries up. You'll also want to avoid selling your business assets without permission. Sometimes when folks do this, it's an honest mistake. Other times it's done intentionally, the business owner knowing full well that the SBA and the bank wouldn't appreciate it and that the loan documents prohibit it. Either way, if you sell the business assets without the permission of your lender, you're setting yourself up for big problems. You also really need to avoid fraudulently selling your business or your business assets. When your world's collapsing, it can be tempting to cut some corners. The bank will screw me if they have the chance, the rationale goes, so I'm just playing their game. Borrowers have articulated to us that they're simply doing what they need to do to survive. And in some cases, apparently that includes committing fraud. The bottom line is that when you defraud a lender, you're crossing a line. There's a major difference between being a smart business owner and fraud. Selling your business or business assets to a friend, family member, or business associate with the intention of buying them back later, then lying about the nature of that transaction is not a viable strategy. You also need to avoid omitting information from SBA Form 770. Everyone understands what the SBA wants for you. Spoiler alert, it's money. Over the 9 years we've been assisting borrowers with SBA offers in compromise, we've come across more than one client that sensed that they had something that the bank or SBA wanted, so they conveniently forgot to include certain liquid investments like IRAs or 401ks or investment properties on SBA Form 770. As part of the process, banks run your credit report, and if they see a mortgage, they'll know you own a property. No mortgage, they can just as easily run your name through tax records. Once a bank catches you with your hand in the cookie jar, you'll lose a valuable asset, trust. Every interaction after you get caught omitting material information will be entered into with the belief that you're a liar, and that's really not ideal if you want to settle successfully. You also shouldn't assume that bankruptcy is your only option. Our general view is that there's never one option that makes sense for everyone. It's no different when dealing with SBA default and SBA offers in compromise. There are alternatives to bankruptcy, and submitting an offer in compromise is one of them. Take out the old yellow legal pad and make a list of pros and cons. For some, settling makes sense. For others, it may be bankruptcy. But before you choose your path, make sure you understand all the angles so you can make an informed decision. Talk to us. Talk to a bankruptcy attorney. Then you'll be in a position to make a decision that you feel confident about. Something else that we encounter a lot is that folks don't understand what they signed up for as an SBA loan personal guarantor. A new client needs to settle 2 SBA loans. According to the client, he had nothing to do with any of it. His ex-girlfriend opened a store and needed his good credit. He swears to us that he asked his banker to confirm that if she defaulted, it would only come back to the business. He says that's what the banker told him. Obviously, we weren't there, so we don't know for sure how that conversation went. But this story underscores an important point. If you sign any legal document, ask a legal professional to review it and confirm exactly what it means. It's also really important that you submit a complete SBA offer and compromise package. We totally understand the desire to get the SBA offer and compromise process over with. Every moment you deal with it, you feel the heartache of losing your time, your money, your business. But you need to focus until we cross the finish line. Focus means making it very easy for your bank and the SBA to understand your personal financial situation. Common errors are leaving out pages of your tax returns, providing screenshots of your bank account rather than actual statements, leaving entire sections of the PFS blank, and ballparking your monthly expenses. Show them that you're taking this process very seriously. After all, if you don't take your offer and compromise seriously, why would the bank or the SBA? You also want to avoid getting aggressive with your bank. A handful of our past clients believed that the successful negotiation of their settlement required aggression. They seemed to expect it to be like a movie. They'd pound on a table, throw a chair, verbally dress down their adversary, so basically they'd fight it out until the bank bent to their will. In reality, SBA settlement negotiations aren't like that. In our experience, you get much better outcomes when you're friendly and respectful. It's 100% possible to negotiate a great settlement without getting nasty. Just think about it. Would you be more willing to help a person who's belligerent and mean, or a person who's friendly and helpful? It's no different with workout officers. They're people just like the rest of us. You also need to avoid having unrealistic expectations about the amount you can settle for. Settlements are based on facts. It's not about lowballing, misdirection, or throwing an offer against the wall and hoping it sticks. Many borrowers arbitrarily choose how much they're offering to settle for. In reality, though, determining the amount of your offer is anything but arbitrary. It should be based on your personal financial situation. And if your personal situation is weak, keep in mind that the SBA won't release your personal guarantee in exchange for nothing. We're all inclined to do this from time to time, but in this process, it's important that you avoid making unproductive arguments. By far, the most common unproductive arguments that our clients ask us to make go something like this. I lost a lot of money on this business. The bank is getting most of their money back because the SBA guaranteed it, and I paid thousands of dollars of interest on this loan. They should be willing to release me. Unfortunately, none of that will move you closer to your ultimate goal. The bank is owed money, and how much you lost is not going to impact their desire to recover as much money as possible. Neither is the fact that the SBA reimbursed the bank, since all that really means is that the SBA stands to lose the majority of the money. You also really shouldn't expect pity during this process. We once received an email from a prospective client who had unsuccessfully attempted to settle her SBA loan by herself before reaching out to us. The SBA swiftly declined her offer and compromise for one simple reason. She'd asked to be released in exchange for nothing. Instead of offering even a small sum, she had tried a different course of action. She sought pity. Her rationale went something like this. I'm just one small fish in a giant ocean. The SBA has millions and millions of loans, and I'm so small that I barely exist. So won't you let this fish swim away? The mistake here is obvious. She assumed that the SBA would read her story, feel bad, and release her from her personal guarantee. But it doesn't work that way. Any offer you make should be based on the facts and figures that are reflected in your financial documents. Forget about appealing to the humanity of the SBA officers. Also really need to understand how the SBA guarantee works. When you're trying to sell something, you need to understand who you're selling to. When a guarantor attempts to settle their defaulted SBA loan, some guarantors invoke a false argument. They reason that since the SBA reimburses the bank for a large portion of the loan, usually 75% for 7A loans, all they need to do is offer the remaining 25%. The misunderstood part is that even though the SBA reimburses the lender, that doesn't mean the debt goes away. The SBA still wants their money back. Your offer needs to be based on your ability to pay. How much the SBA reimburses the bank for is irrelevant and unrelated to the amount you pay to settle your SBA default. Tempting though it can be at times, you need to avoid trying to go over your bank's head. It's never easy to deal with a difficult bank. Slow response times, short or cryptic responses to your direct email questions, and of course a declined offer and compromise. In situations like this, a guarantor's instinct is to seek a lifeline. The natural place to turn in this case seems to be the SBA, but it's not. The SBA pays lenders a servicing fee. Until the bank closes its file on you, the SBA expects the lender to handle all servicing matters. This includes evaluating and deciding on an offer in compromise. Unless something egregious is going on, the SBA invariably declines to get involved and will defer to your lender. In other words, they'll say, sorry, you need to talk to your lender. You also want to avoid underestimating the value of your home. It's funny how these things work out. When borrowers apply for a residential mortgage or a home equity loan, they always complain when the appraisal value comes in lower than expected. No way, protests the borrower. My home is worth at least $100,000 more than that. But when the tables are turned, we hear reactions that are exactly the opposite. Now, when a borrower estimates the value of their home, that house all of a sudden needs a new roof and has a cracked foundation. We list the value of the home on the PFS, the bank orders an appraisal, and guess what happens? The value comes back higher than the borrower estimated. Of course, that means there's more equity in the home than we stated. The ultimate result is that the offer in compromise we submitted was too low and needs to be increased. Bottom line, when you estimate your home value, be reasonable and try not to let your desire to reach a low settlement bias you. This should go without saying, but you shouldn't expect your lender to pay for your lifestyle. Section 23 of Form 770 asks you to list your fixed monthly expenses. Some take this as an opportunity to list their country club dues, vacations, and boat payments. Sure, these are actual expenses, and you actually pay for them. But keep in mind what the point of this exercise is. The bank and the SBA are attempting to determine if you can afford to continue making your loan payments. Even though not explicitly stated, they're asking for your non-discretionary expenses, your mortgage payment, loan payments, utilities, and so on. When you list items that are clearly not needed, you indicate that you expect them to wait on payment while you do nothing to curtail unneeded spending. That is not a good look. It's also really important that you appreciate your non-guarantor spouse's impact on your offer in compromise. Just because your spouse didn't guarantee the loan doesn't mean that he or she doesn't play a role in your offer in compromise. When a spouse has significant income or assets of their own, a banker could easily argue that your spouse could pay all the household expenses. That would leave your income available to make SBA loan payments. And the final pitfall that you'll want to avoid is assuming that you have all the time in the world. Scrambling at the last minute makes for unnecessary stress for everyone involved, including us if we're helping you. We understand that not everyone's going to hire us, but if you do, make that decision well in advance of the deadline. It'll reduce the stress level for all involved, and ultimately it'll result in a higher quality offer and compromise package. For more on the SBA offer and compromise process, visit us online at www.jasontees.com and for information about your personal loan situation. Give us a call at 631-428-1978 or email us at jason@jasontees.com.